The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
So what do we have? We've got the S&P up 7 points. Higher, lower. News about a handful of issues, mostly trade, interest rates hitting. The ECB kind of started off this morning. I'd say if there was a big story in the stock market today, it is this dollar. The June 8 DXM8, which is the current contract, up $1.21. 94.77. It is a monster. I think we had a lot. In fact, I still think that not only do we have a lot of people on the wrong side of the dollar, we probably have a similar amount of people on the wrong side of the market. It just hasn't quite caught up yet. That is my opinion. The fact is the dollar's up $1.19. So a lot of people thought that everybody'd go running for the hills. Just the opposite has happened. And that is the problem when everybody starts believing the exact same thing. Market tends to be a little smarter than them and run off to the other side. So we've got a lot of that. And you would think, well, dollar's up, gold's going to be down. Well, gold's up about $5. Silver's up almost 23 cents. Platinum's up $6. Dr. Copper down almost 4 cents. So if you think the market likes to zig when you zag, I think that there's a lot to that. So that's there's a lot going on out here today. We'll go through it. One of the spookiest and scariest charts in the market. We'll see how the next day or two go. But I just every day I keep seeing more and more charts that just want to scare the bejesus out of me being long. We'll talk about the scariest chart in the market today. We've talked about some other scary ones. Just a very, in my opinion, very overbought and very overextended market. I think you can make a case for extended euphoria. I added to my short positions today with another one. I have a one option position on for tomorrow. We'll see how that pans out. It'll probably go away unexercised. But at this point, I had a fairly decent risk-reward loss set up of about 50 cents to make about 250 if I was right, and may lose 50 cents if I was wrong. And all I have to do is be about half right to make it to the mansion. Anyway, 2782.5 on the S&P cash. Another little tidbit of news hitting here and bringing it back. No volume up, just a little bit more volume down on the downstrokes today. But I can say on a daily basis, we're doing about 600 to 700 million more shares on down days than we're doing on up days. So there is a distinct selling into these pops. They tend to hang up and around and go sideways for a lot of the day. At lows, when stocks go sideways, it's mostly accumulation. When stock markets go sideways at highs, it's mostly distribution. I have almost all my positions in either equities and or a July 20th expiration puts. So I've got the ability to sit on my hand till the July 20th area to come in. I've got one that I've got a buck in that could pay out $10 if I am right. If I'm wrong, I lose the $1. As long as I can do that, stay just right half the time, I'll be a happy camper. But we'll see. Just seems like there's someone willing to buy every time the market goes down a little bit, and then the kind of the volume goes away, and then we tick down a couple of points. Doesn't look like there's a lot going on. Now, tomorrow, it is quad witching. And like I said, I think this dollar moving has a lot of people off sides. Now, could we wake up tomorrow morning and see the market go higher? Yes. Or lower? Yes. My guess is we're going to have a lot of action tomorrow. This dollar movement, the Fed adding one more rate hike, I think going into quad witching is going to find a lot of people on the wrong side as other things today. We'll have to see how we close. That's the most important thing. Options, when we opened up this morning, were even worse than the first week of February this year. There is no liquidity in the futures market anymore. If you want to paint the tape, it's never been cheaper pre-market than to do it today. In fact, at 6 a.m. this morning, I could have moved the market by probably 5 points in the S&P cash. I don't think it would have taken more than a couple of contracts to move it 5 points. That's how thin these things are pre-market. That's also one of the reasons why we had the huge move down in February. There just wasn't anybody in the market, and machines could just run them anywhere they wanted to. That becomes a ongoing problem that is going to kind of try to keep me away until we find out why the futures markets, well, I kind of know why the future markets have just kind of gone away. And that's your high-frequency traders wiping people out overnight in thin markets. No one wants to be in those markets anymore. So we really don't have a lot of price discovery overnight anymore. And that may be why we've had this kind of little run on no volume higher in the market for the last couple of weeks, just the same. So we had the big move down. I am fairly bearish. I am willing to not be bearish if I get any of the signals out here that tell me that I'm wrong. But from just the energy going up in a lot of stocks to the light test of previous highs on light volume, I mean less than half the volume, I can understand a lot of people that say, I don't believe in volume. Well, that's good. I think a lot of it comes from the fact that around 2000, if you learned how to trade price and volume, you looked at volume and said, hey, it's off 10%. That's all I needed to know. In fact, when I learned to trade, that was it. You had 15% off of an equity at a high. Man, you were all over it. Now that's 50%, maybe even need 40% to get a good signal. And that may be that there's just so much background noise with high frequency traders. Anyway, sitting on my hands, waiting for the money to come to me, but I'll probably be waiting into July. Quad witching tomorrow, we could see some big movement after these, I'm going to say, seismic events in the market today. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Then it's all just a little bit of history repeating.
2781 on the S&P cash. Anything below 2775 should see acceleration. My guess is we'll wander around there. But if you're wondering where the bodies are buried, that's it. You start hitting that, you're probably going to start hitting some stops. So get anywhere around that 2777 and below, you're going to start running into stops because that's where everybody's taught to put them. So well, just underneath that, my guess is we'll go down there and venture down there and find it. And we'll be watching the news to see if anything crosses the tape. But a fairly weak market. It is nothing but history repeating. And on this day in 1822, Charles Babbage unveils his design for the machine he called the different engines, the first example of a mechanical computing machine. The British government funded the building of the difference engine, which Babbage never actually completed. He could have completed it. The problem was the king didn't want to pay the money. Babbage's design for the difference engine and his later analytical engine spurred future designs of working mechanical computers. And in 1991, a working difference engine was constructed using Babbage's plans, proving that his design would have worked. I saw that in the computer museum. They had it on loan for a year. Pretty neat device, but to think in 1822 they had a calculator that was significant to 31 digits was very interesting. To me, a lot of times people ask me when I get my first computer, and I kind of tell them, well, 1977, 78 with the Altair 8080 I built out of a kit. But if you talk about mechanical computers, not slide rules, that kind of stuff, I actually had a Digicomp when I was 13 years old, some of the people that used to look at Edmunds Scientific catalogs where you'd buy neat whiz-bang stuff may remember this. It had a bunch of little plastic sheets, and I'm showing it. Maybe they're showing it in the control room too, so you can see a better view of it, because we don't get such great color pictures across this system. But it was very interesting. It had little slides, and you cut off little pieces of tubing, hard tubing, and put it on little barbs, and that was a 1 or a 0. And you could play a lot of very interesting games. I think they had like a 50-page book on how to program it, and you had you can't really see it here in the picture, maybe in the little back, but you had little these little bits, and you could put them on the front and the back of these slides. You could even get different slides at one time. Anyway, you'd move this thing back and forth. And it was really a very small mechanical computer like Babbage's. Babbage's was incredibly interesting for 1822 in the fact that it had a printer attached to it. And the whole idea was that when they started making rifled barrels for guns, that they could start kicking out artillery tables and tables for other things, tides, a lot of that kind of stuff. It was going to be a kind of a universally programmable computer. But, you know, you see these kind of weird movies where people have this kind of weird technology. This thing, Babbage's computer, was, I'm going to try to remember, I think it was about 8 foot tall and about 12 feet long, but it actually had a printer. And the printer didn't have ink. It just kind of put imprints into the paper, and then they'd put lead on the paper and make a plate out of it. But mechanical computers in 1822, practical, and led IBM's use of them right before 1900 in punch cards, but never completed it. King ran out of money, but someone took the original drawings and made it, and it is quite the work of art. Poetry in motion. What else do we have going on here? I want to show the, we'll get to Dropbox in a second, maybe after this next break, which is one of our emailers going on. A lot of short squeezes going on, so we'll get to that. What I wanted to get to was Mr. Fakebook. So let's get out here. When I talked about scary charts out here, this is one of the most scary. Let's try to get this thing looking a little different here. Huge move off the 186 low, or high, excuse me, March 12th, back to 149. Never tested that low of March 26th. But as we went up, energy, you know, you had a couple of days where they kind of ran the shorts out of it, but there just hasn't been much volume. We get back to before all this happened, February 1st, 195.32, 54 million shares. And what do we have? Yesterday we had 15.6 million shares. Today, 12.5 million shares. But I'm figuring somewhere around about 17 million shares by the end of the day for Facebook. So you're going to be breaking highs, not by a little, but an absolute monster amount on Fakebook. So this has been kind of the thing we've been talking about for a while. We started seeing it happen in the Qs. They're trying to push it up and over today. You need 55 million shares in the Qs. What do we got? 25 million shares with an hour and a half left to go. There just isn't really much energy up here, and the energy off these lows has been rather pathetic. At first, I just thought we'd go up here and then we'd pull back. But the longer that they and more that they push this market up on light volume, some people have compared it to a rubber band. The more you stretch it, the more it's going to hurt when it breaks. And I've seen these go on longer, so this wouldn't be the first time. But without volume, I will remain very cautious on the long side of this market, and I will take my opportunity to add short positions where and when I can. Now, maybe I stop out. That's fine. I'll take my losses. But when I'm right, I'll make probably 4 or 5 times of what those losses are. Many times you have to try several times at these highs. They're not as clear as they are at lows. But you got two options. Either you can short or maybe take a couple of times, make a lot of money, or you can wait until the market settles back down and just be a long trader. But you never know. Oh, do we have time? We'll pull up the chart here. We're going to go look at Dropbox. It's had a nice run, and then we're going to get into the mechanics of how a lot of these things are being done. But any of these new IPOs, it is very problematic to be trading these things and not know exactly when lockups coming, or when lockup is, and when other things are happening, like additional short positions, and how much it's got. We'll talk more about this when we come back, but that'll be it. Anyway, give me a call at 877-927-6648. Email me at pat@tfnn.com. And, of course, you can always put a message in the den.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
One of the problems with being in recent IPOs is you don't have a lot of history on how they trade. You also don't know who's behind them and what stunts that will pull. For Dropbox, the old rumor being pushed out about them being bought out by CRM is been kind of shopped around out there today. And if you're wondering, that's why this thing popped out. And of course, you always have to worry about these new IPOs with the short positions that they have on them. This one, it gets anywhere from about 16 to 17% shorted on a daily basis. Of course, all the people don't go home each day with that, but you can kind of imagine that starts to build. And the last, one of the problems though, in the last reporting period on those shorts is you went from 1 day to cover to 3 days to cover. So things not getting any better for you. You get these sideways movements like you have. We talked about it yesterday and another stock, but you got this sideways action, and a lot of times sideways action at lows, not at highs, like this one spiked at 34.83. If it would have done the same thing on the high side, I would have worried about it going down. On the low side here, you just have somebody accumulating it. Maybe this is the same person or persons that are shopping the buyout by Salesforce CRM. But so far, a lot of smoke, no fire on this. But you get into markets that are kind of at highs, and you get a lot of this. My guess is that it's not true, because CRM probably wouldn't be higher if they were going to throw lots of cash at Dropbox. So I would have been thinking about buying this rumor a lot more if Salesforce had been down today and some people had been selling it on them buying something. Yesterday, 5.8 million shares in CRM, and today 4.2. So, still not one of the stocks that I'd want to jump on short, but it does have risk back down to about 128, and literally no juice since this thing popped up on May 30th. So these things do have a lot of room to pull back down, and maybe you're trading them with options, and that makes the risk reward right. But I haven't looked at the options in this one yet. So hopefully that answers your question, and that was from Tamar. Tamar does not tell me where he's from, though. Could it be Lutz? Well, you never know. Okay. What else do we have? A couple of updates. Okay, let's take a look at some other stocks. MSFT, looking at options in this, really kind of looks to me like this thing wants to come back down to 100 for tomorrow. Very little movement today. So I'm looking at this one. Even if the market doesn't move, my guess is that there's a 90% chance that this thing, Microsoft, expires at $100 and a quarter, or $99.75. Just kind of keep an eye on that already. Other stocks that like to get pinned on expiration are Apple. This one continues to kind of be on the light side. It's close to 190. It is one of the weaker stocks. The 4 days or 5 days of sideways action up here smacks of distribution. But again, this could be the most easily manipulatable stock for Mr. Buffett ever, when he just has to call up the CEO and tell him to buy back a few more shares to make sure this thing just goes sideways. And let's get those pesky short people off of Apple, and we'll just bore them out if that's the only way to get them. But does Apple have significant weakness? Yes. Do we know that they're going to be selling about 20% less iPhones for the rest of the year? Yes. Why does it matter? Because they'll just buy the shares if they go down a quarter or a dollar. They'll come up with some other stuff. They'll talk about buyouts. They'll do a lot of other things. Stocks like this can do this for a while if the setup is right. It's like Tesla. In Tesla, one of the reasons I didn't like being short the stock was the huge short interest in it. One of the other reasons is this stock, if it goes lower, goes bankrupt. And we're seeing stunts like we saw announced last night with Elon Musk buying $25 million worth of shares over the last couple of days. And the reason why is below about 325, Tesla loses its shirts on bonds. I think they're bonds or warrants that expire in about 10 months from now. If he doesn't want his entire empire crashing, you'll have to take a look at anything below 325 on Tesla. Really becomes problematic. So can he keep a stock up that has enormous problems, kind of like a screen door on a submarine? But you know what? Weirder things have happened. What you don't have is a lot of volume. 2 days ago, you had 22.3 million shares on the spike. Today, about 8.2. So it's kind of the rest of the market. There are some stocks that look worse out here. Again, I'm not pulling the trigger on this short, although I will one day. But the energy on the way down is about the energy on the way up. And again, when you have, let's take a look at Tesla's bi-monthly reporting. Has 6 days to cover. No, thank you, ma'am. I will find better fishing elsewhere. And about 20% for the last 7 days, as much as 25%, people shorting it. This is the proverbial pot that will not boil until everybody looks away. Please wet my beak. Just wet my beak. Yeah. So anyway, what else do we have? Got somebody wants me to look at something else. So we'll go back and look at that. 2781 on the S&P cash. So not a lot of momentum, but we did have some stocks pop out here today. Okay, SMH is still the weak sister of the NASDAQ, even with the movement of NVIDIA today. Man, you got like 1, 2, 3, 4, 5 dojis over here. You got to be very worried about what that's going to be. A big break would take this right back to 105. Is that going to happen tomorrow? Probably not, but you are developing a sideways action out here on dojis. And, you know, if this thing was back at 96, be a buy signal. Up here close to the 114.55, something that you should really worry about. We'll be back in a minute, but semiconductors continue to be the weakest, but they've already told us that. Half the business of all semiconductors is now in phones, and everybody from Samsung to Apple selling less. How could that be a good thing? We'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I wish I was a spaceman, the fastest guy alive. I'd fly you around the universe in fireball Excel file. Way out in space together.
Okay, I don't know why I got that. What did I say to bring that one up? Anyway, 2782. Let's take a quick look at volume out here. As we said, about 7.2 billion shares on the downside recently, and right now we got about 4.2 billion shares on the upside. So not a lot of juice driving this market higher, but certainly handful of stocks out here kind of busting up and over. If you want me to look at your particular stock, you can always email me at path@tfnn.com. See if we have anything else out here that I wanted to look at. Well, we talked about the Qs, right? Let's take a look at those real quick. Well, yeah, you got 26 million shares today compared to that 55 million share high on March 13th. Energy was a lot less on that April 3rd low, and nothing's really picked up here in the last 2 or 3 weeks. So again, a light volume move back up into the highs in the summertime. This means that generally you're going to probably hit an air pocket soon. Okay, we'll start looking at some other things. Question about airlines. Let me see if I can find that. I can find my list of airlines. Where are they at? Oh, there they are. Okay. With the dollar increasing and crude kind of staying still, not much going on. All these, Love is the only one that's got a little bit of a movement. It's up 1%. Maybe there's something in the bigger picture. Okay, so you finally did come down here and test Southwest Airlines' previous low. That's September 6th of 2017 low at 49.51. That was 8.6 million shares. You tested it with 7.3 million shares. Energy was more on the way down than it was on the way up, not that much. But that would tell me that after the small bounce, you're going to get a retest of this $49 area once again. They had a little bounce a couple of days ago, kind of set their low when they said they were going to be raising prices for the fall for higher gas prices. But that, again, hasn't done much. If crude prices were really going to probably move a lot, we'd probably see a lot more action in these one way or the other. It tends to be making look at stuff. Okay, and what is it? You want me to look at, is it GDX or GDXJ? Let's take a quick look at both of them. GDXJ, the first one. When I talk about triangle patterns, this is the one where you want to stay away for the most part until you get a real indication of which way this thing's going, because at least for me, I've never been able to tell when these things get as tight as they have. But what is it here? Okay, going to do this with a new Windows feature. But certainly when you get these triangle patterns, I wish they'd get a nice line tool. Do they have a line tool? I don't think so. I'll have to find out about how you do that. This is all freehand. Anyway, when you get a nice triangle like this, we do have a nice ruler that I can move. And then, yeah. Well, now if I could just have two of these, I'd be happy. But you've got these triangle patterns that are kind of set up. We're far into the apex of these triangle patterns, but certainly you haven't broken out to one side or the other significantly. You had some kind of false starts back in April and in May, and they just came back to nothing. What this is telling you is that there will be a big move. 80% of the time you want to wait for this thing to bounce one way or the other. If it bounced down and you didn't have much volume, maybe 31 or 31 and a half on the GDXJ, that would be kind of a signal that you'd want to go long. If this thing bounces higher on light volume, maybe back up to, well, I got to move the maybe up to like 34 and a half. And there's light volume, and then it starts pulling down would be the confirmation. Then generally it just runs the other way. But I don't know. Seems awful hard these days to forecast the dollar. And let's take another quick look at that. Still up 116 on the U.S. dollar June 18, 2018 contract DXM8. So what else do we have going on here? Natural gas, basically flat, had numbers coming out. Don't think there was that much in it. RBOC is down 3 cents, though. Let's see if there's anything else out here that I wanted to look at in commodities. I don't think so. Let's go back to looking at some of these other ones. Question about Amazon. Amazon just keeps moving up here. Of course, there's not a lot of volume, but there's no signal that this thing is going to fall out of bed just yet. You do have a lot of gaps below. This gap at about 1550 probably will get tested. The question is when it breaks off this 1721 high. But certainly not a lot of movement. You didn't have, I mean, you had those one day when it popped above 1617. It did so with 13 million shares compared to the 6 million shares, but it came right back into the trading range. And from then on, it's gone up on fairly mediocre volume. You had one day with 5.5 million shares on the 6, but this thing is just kind of ticking up a little bit at a time. And the question is, when will these things do it? And it's more of a daredevil thing, right? And I can go just a little farther toward the edge of that cliff. I can go just a little forward or closer to the part of that cliff. Got a question about SCO. And again, I'm not, I liked going into the 3-day weekend. What was that? The 28th and 29th. Really thought we'd have some movement into crude. And you got up to 1950 in the SCO, which is the ultra short part of it. Now you're kind of coming back. What you want probably is somewhere around 17 bucks. So you may have a little bit more out here, but could you be having a nice setup for an ABC higher? I think you can with the dollar moving higher. We'll have, besides all the other news tomorrow with quad witching, we will have at 1 o'clock, the Baker Hughes numbers. And to me, that is the best number to be looking at because that is the supply coming on and much easier to see. People don't really change their driving habits that much in a week. Certainly, though, you get 4, 5, 6, 10, 20, 40 new wells that can produce something. That does affect the balance of supply and demand. We'll be back after this.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, let's try to catch up here. 2781 on the S&P cash. Is volume or anything picked up? Nope, still up $1.14 on the dollar. 4.3 billion shares compared to the 7.2 billion shares yesterday. So again, we have to kind of keep an eye on this, but certainly on a daily basis, there's more volume on the down days than there are on the up days. So not a big surprise that we're kind of starting to go over here, I think, on kind of a right shoulder of what's happening. Now, the question is, how far does this pull back? I'm probably one of the bigger bears out here into July, mostly just from the patterns of price, volume, movement, and, you know, just a lot of other things that I'm seeing out here. A lot of stocks having huge moves, probably unwarranted for the underlying financial conditions. Some of them are short squeezes. Some of them are just people rather euphoric. And I don't know. Being through a couple of pullbacks in the market, all of the .com mess, and of course the housing mess, you know just how wicked these things can be, and how little anybody's talking about the other stuff going on. I do see some other things kind of telling me that maybe the gamblers are kind of getting the dirty end of the stick, if you know what I mean. With Bitcoin continuing pulling back off its $20,000 high. Now, we had a little bit of movement today with Bitcoin, and the SEC saying that at least Bitcoin is not a security, but a lot of the ICOs were, and that means that the SEC will be going after them for their ill-gotten gains. Very interesting article last week about a lot of those people with ICOs trying to go across the Mexican border with bags of cash, which I thought was interesting. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.